So to talk more about how the market operates in today's technologically advanced landscape, I want to give you a piece of information that I gather a lot of my resources from. This is a survey that's done every 3 years by the Bank for International Settlements. This survey is called the FX Forex Execution Algorithms and Market Functioning Survey. This survey has so much information about how central banks all over the world are not just communicating, but also trading and exchanging funds through the Forex market. And if you look at the survey, they do it every 3 years, so we have another one coming out here shortly in the next couple of months. If you look at this survey, you're going to see insane statistics about not only market growth in terms of size, but you're going to see traders and trading hubs from all over the world popping up and growing, specifically even mainland China, somewhere that you would never think is growing in popularity with retail trading because they have their own form of the internet that the rest of the world doesn't even use. So you wouldn't even necessarily think that China would be the next trading hub. But when you look into this survey and you look into some of these statistics, you actually find that. So specifically, in 2019, they found that trading in Forex markets reached $6.6 trillion per day in April of 2019. That is up from $5.1 trillion 3 years earlier. The other important thing to remember, so now you understand it's a $6.6 trillion per day market. It's probably bigger now because it's 2021 and this was 2019. But beyond that, the US dollar, it says right here, the second line, the US dollar, I like my little pen there, I got to use that more. The US dollar retained its dominant currency status, being on the side of 88% of the currency trades that happen. So that means that the US dollar is so important that it takes at least half of each currency trade 88% of the time. That means someone is using the dollar 88 out of 100 currency transactions. That's how big the US dollar is. So when people say, as I mentioned in the last chapter, oh, fiat's going to zero, the dollar's going to zero, show me what we can replace it with, because it can't just go to zero if 88% of Forex transactions happen with the dollar. Now, why this is important is because Forex transactions are not just traders like you and me going to the computer, reading a chart and clicking some buttons. We're talking huge multinational corporations calling up their bank and saying, hey, let's just use this example. We're in Germany, we're Volkswagen. We want to set up a plant to build cars in Japan. Okay, we call up our connection at the bank and we say, hey, we need 20 million yen in order to make this happen. All right, so we need to take euros and convert them to yen because we can't just get on a boat, show up in Japan with euros and think that all the people in Japan are going to want our euros. They're going to want to be paid in the currency of that country. In this case, the yen. Germany is in the Eurozone, okay? Now, just in this example, 1 euro at the time of me taking this picture is worth 127.46 Japanese yen. So when they go to the bank and they do this transaction, they have to do a huge transaction. And the bank makes money on the spread, a commission, so to speak, on that transaction. And now this is happening all over the world, not just between car companies, but between companies in every industry. Remember what I said in the first chapter. Globalization, the world is shrinking. The internet brings us closer together. We've got people that have businesses here that are doing transactions, like we have members of ASFX that are in Singapore. We're in every continent except Antarctica. And we have other businesses that we can look at in other industries, like Amazon businesses. You've got guys in Florida running an Amazon business that sells seat cushions, and they're getting their stuff from China, put on a boat, brought to Singapore, then from Singapore to California. The world is just shrinking. And a part of that shrinking, we're actually seeing more, according to that triannual central bank survey, we're seeing more Forex transactions. So what does that mean from what you've learned so far? That means that we're seeing more stability, more volume, more participants, and all three of those things make it easier for us as traders to take advantage of this fluctuating exchange rate. If you look at this chart, it's a 1 month chart. You can see it right here, right? It says 1 month. That 1 month shows us that a month ago, it was under 126 Japanese yen to equal 1 euro. And that price has changed over the last month. That change in price is what I'm going to teach you how to take advantage of and make money on that changing exchange rate. Now, you're not going to be buying a bunch of euros and then selling them for a bunch of yen and you're showing up with bags of money at your house. That's not what trading is. We're trading it as a derivative market. We're getting a little technical here for the beginning, but that's okay. I'm just giving you everything I know. A derivative market, basically, for the simple of us, means that we're trading an IOU. We're not trading a actual currency, we're trading the value underlying that currency. And that's where the ECNs, which I mentioned already, the ECNs pool the best possible price. For example, this 127.46, your broker might have had a better price than that at the time of when I took this picture. That would have been potentially better for you depending on how you were trading it. So the ECNs do their best to give you the best possible price. And like I said, we're just really little fish in a massive ocean where you have these companies doing hundreds, if not thousands of transactions every single day. And that's why the market is so big. Now, where you probably know Forex is when you've gone to Mexico and you walk through the airport and there's a big currency exchange converter and you want to take your US dollars and convert them to pesos. That is also a Forex transaction. I'm sure you've done that. Or you've gone to even a European country. A lot of European countries don't necessarily want US dollars, especially if you're going to the mom and pop coffee shop. Don't pay them with dollars, you pay them with euros. That's what they use in their economy. So anytime you go to a different country, think pre-COVID, when people were traveling all over the world, the currency exchange desks were popping. But I use Mexico as a reference because that was one of the last times that I had to do this. And you should have seen the line at the currency exchange converter because people understand, hey, I can't use my US dollars when I go to Tulum, they want pesos. Everybody gets that. But very few people understand until they watch my videos or until they go into the market that that is a Forex transaction, just on a very small level. And if you notice that that exchange rate will change throughout the day, at least that's how it was in Mexico for us, what that is that broker or that currency exchange booth is changing the spread. That they're making their commission there on, let's say, if it's $1 US to 17 Mexican pesos online, you might go to the currency exchange booth and it might be $1 to 22 pesos. That 5 peso difference, that's what that currency exchange booth, aka the trading broker, they're the same thing in this example, that's their spread, that's how they make their money. So that's the real world application of how the Forex market is used today on a large scale with multinational corporations like Volkswagen and on a small scale like you and me when we're just trying to go to spring break and have a good time. So now we're going to move into more of the geographical locations of where the Forex trading happens and the timing of when that Forex trading happens.